Good afternoon, ladies and gentlemen. Good afternoon. Hope you're doing well, guys. If you give me a quick sound check, please, that would be smashing. And then we can get this show on the road. Have a look at what's going on this afternoon. Awesome. Thank you very much, guys and girls. Thank you. Awesome. That's great. So, how are we all doing then? You guys okay? Hopefully you're doing well today. Not just in terms of the markets, of course, in general. It's definitely had that feeling that the markets are waiting for a major news event for most of the markets, I would say. It's been incredibly slow pickings. A lot of the stuff has. A lot of flip-flopping and price action pullbacks and kind of teetering around. It's just sort of all holding tight until this evening. We did get some pretty good Euro moves. This Euro NZD, look at that. I was looking at this all the way through the no man's land. We got this really decent break of structure here. It came so low, down to 178.63. It is finding a little bit of a bounce now at the median of the trading margin here, which is where it's bouncing. But yeah, it doesn't look too hopeful yet for the retest. Obviously, we can't take the trade until the retest is completed. So that's what we're looking for so far. But again, nothing we can do. There's not much we can do at this stage in the markets, really. So just before I start digging in, have a look at the US markets this afternoon, which will probably be the highlight. It's going to be a bit rough, I should imagine, because everyone's going to be waiting for the Fed this evening, which is a good segue into what I'm about to say. Is anyone actually going to be available at 7:30 in the evening for the FOMC event? Like, I don't want to waste time, as much as my own time is your guys. I just wanted to sort of gauge what a general consensus is for it. Obviously, Braden, Matthew, you guys are over in Oz, so that's going to be, ridiculously late for you. Nadia, I appreciate you're incredibly busy lady, so, it might be a bit rough for you. Sky, I mean, me lounging around with a can of bud in your hand, you might be interested. Nah, I'm joking, mate. But no, generally speaking, I mean, the FOMC things, yeah, they're good, but they are, it is, it's just very antisocial hours, isn't it? Yeah, this is the problem. It's very antisocial, especially at this stage of the business. At this stage when it's sort of the nearest and dearest, predominantly making up the audience. Yeah, okay, we've got a lot of members, but a lot of them, I don't think many of them will be online at that kind of time in the evening. So I guess we will give it a miss. The problem is with the FOMC Wednesdays is obviously historically, we get some really good price action in the evening for the event itself, but leading up to the event, it's seriously dry. There's not much buying interest or selling interest. There's not much market interest because everybody's waiting. That's what everyone's doing. So, I mean, I'm quite surprised at some of the moves we have had today. They've actually been not too bad, but a lot of these assets at the moment, state of affairs in gold, just kind of like, just really slowly cruising along sideways. We did just come out and stop out an hour ago just before the stream, obviously, but yeah, it's not looking good. Brent, we're just kind of stuck in at the moment. Not really doing too much of anything there. Continuously, being held back by this point of liquidity here. This area as well, perfect rejection of that ascending level there. To be honest with you, this ascending level should have started from there. I don't actually know why it's not. That's that one. So, yeah, it's just kind of trying to find where the moves are, isn't it? The Australian dollar versus the Canadian dollar has been pretty good. So this had a really decent breakout. The unfortunate thing is it took place bloody early. It was about 6 o'clock this morning. And yeah, about 7:15 when the initial breakout took place. We got a secondary entry criteria at 92. And that was actually a really nice, decent little trade. Didn't take it, of course, but it was nice nevertheless. We'll be looking for the retest, which is currently underway, of the previous highs here. And then expecting that one to continue. I mean, look at the daily chart here. We've got a relatively decent trading margin through the daily liquidity, which is what we've just recently broken through. And we'll be looking to take that up to the previous highs. So there's a really nice little trading margin here that's accessible for us. Back down to the 15. And so then ultimately we're looking for the price action to push into this area and then trade higher. So Aussie CAD, not a bad little call at all. I think it does need to come down. But I think that's going to be a nice little opportunity. Unfortunately, for those of you who won't be able to sit at the markets for a while, this is not a breaker structure trade. Naturally, we're waiting for the retest to complete and then the continuation to take place, which means this is predominantly going to be a BCR market order trade, unless you wait for the retest to take place, obviously, and then place the pending order after the fact, which is, you know, obviously a viable option and definitely is absolutely fine for you guys to do that. So yeah, that's kind of that one there. And the Aussie yen short doesn't really seem wise with the Aussie CAD long, but I still like it. So that's still like a valid trade at this stage. It depends how much the Aussie CAD pulls back, right? If the Aussie CAD starts tanking, like the Aussie dollar here, for example, I mean, we've come up. We're literally a stone's throw away from TP, and now we've fallen back down to, 67, 78. You know, we only got into the trade at 67.72 on that one, so yeah, it's not far away. CAD Swiss at this stage, again, we've seen this quite nice. This is not unusual actually for all the pairs that we've been looking at. This move here. The only problem is with this move here is it's an area where we don't want to be trading. You know, we've got some trading margins here. We took a loss on this one yesterday, break a structure trade. Euro against the Oz, that's not been too bad, like I said. Scrunching up the charts here for a moment. Well, it's clear where the major inflection points are. How are we going to monetize it? That's the thing, isn't it? How are we going to monetize it? Let's have a look. We've got this point in liquidity in here, don't we? And that's the midpoint of the W reversal that we had. So that's naturally a nice point in liquidity in there. And if we look just above, we have this one in here. And so therefore now we've built a very, very simple trading margin. And actually, as it happens, look at this. Guys, I tell you what, that is actually a really sound trade idea. That's beautiful. Break a structure, retest. Really, really nice little trade idea, this one. Yeah, I'll be going for just a straight up 1 to 2 on this. Yeah, I'm plugging that in, guys. I'm gonna go for that. That's a really nice little trade. You have a TRF, previous low. And that's it. $164.03, $164.18, $163.72. I'll go for 71.5 actually on that one, yeah. All right, 3-0. Yeah, definitely worth 0.25 in my eyes. Obviously, you guys have to take a punt on it. It's your decisions, as always. But this has met a lot of criteria. Really nice trading margin here. We've only got, this one TRF. We've got a lot of really nice inflection either side of this. Buy side, sell side interest. Markets dropped through there before. We've got a perfect break, close, and retest. Really nice place for the stop and the TP. Good process. Good process-driven trade. Right. Let's carry on. Euro against the yen. No, thank you. Really liking this Euro NZD, but it just needs to come back. I mean, to be honest with you, based on the Euro Oz that we've just taken, this probably won't be coming back if we're to be correct. If this comes back to our entry point, then we've lost the Euro Oz. But that's the nature of hedging. So we'll have to wait and see. I might go for a round 2 in the EA anyway, because I do like that trade idea. So there might be an attempt number 2 on that one. You have to stay tuned. I'll let you guys know in the Traders Lounge. Euro USD, never even plugged this one in. It's not been a terrible range. We've had some pretty decent swings now and again, but it's just not going for it, is it? This is a really, really nice point of trade in between these two areas around 111.12 and 110.50, but it's just not having it at the moment. Yeah, this has got some work to do. Obviously, the FOMC this evening's really going to shake the boat on that one. Right, so I don't think we've even had a look from the GA on, did we? And it's Wednesday as well, so yeah, let's do all these. So yeah, don't worry guys, this is not a trade that was plugged in either. This is actually for James last night. So GA at this stage, yeah, it's not looking great. Really rangy, very quiet, ranging and quiet market state structure at this stage. Not much to be said about it. I mean, based on this criteria, it does look like it should go short, but the problem is now we formed too many lows here. So we've got a real floor starting to form at 194.60, which makes the trading margin far too tight to pull off anything successful. And you don't want to take a trade at sort of 194.75 or 70, actually 73. 194.73 is the breaker structure area for this, and that's going to be directly above the previous lows. So it's a no-go for me for the GA. We could take the GA long, back up to this area, hedge our bets against the Euro Oz. That might be a nice little hedge. Don't know if you guys are interested. I think as far as a fund idea goes, it's quite decent. So you're looking at a breaker structure around there. You're probably going to be put in at their TP and your stop loss for a 1 to 2. So yeah, I think that's pretty decent actually. I think that's a decent hedge against the Euro Oz. We lose the Euro Oz. We may end up winning the GA, which would then give us the 0.25 plus another 0.25 return back. Offset some of that risk in our Euro against the Oz trade, which is at this stage just sitting at break even. What do you guys think? What's the general sentiment in the room? Take the day off until after FOMC. Very good, Scott. Okay. Very good, mate. Very good. I thought you'd be getting stuck straight in. Okay. What about you, Nadia? I saw you typing something. What do you think? You think hedging the odds is a good plan? I mean, I do as well. Obviously, it's my plan. So I'm not gonna suggest it if I think it's a bad idea. But I think, but in all seriousness, I mean, looking at the Euro Oz at the moment and where this is, where this is at, it's a really nice trade. It's process driven. This GA long would be really nice and process driven as well. If one fails, the other one likely wins. So I think having a 1 to 2 there to offset some of that risk from the Euro Oz is a good idea. I mean, the main risk we run is that the market just wants to have a bit of a larger pullback, and we come to an area like this, for example, which is taken from the inflection points here, this point here, the mid of this M, break, close, retest, this sort of rebound here, and we stop. We stall. We come up to this point and we stall, and then we come back down. But I think that's a worthy one. I do. So I'm going to plug it in. GA long, 195.020 for the entry, 195.30 for the TP, 194.88 for the stop loss. And we'll see where we go. We'll see how we fare. Okay. Right. Pound against the CAD. Bloody hell. I actually missed this. That was really nice. What? That is such strange price action looking at that. Yeah, pound data definitely helped out with this one. Beautiful breaker structure, 179. We're now trading up at the previous highs, 179.68. Possible breakout, could be a go. What's the daily saying? That's right, you did indeed, Scotty. Yeah, nice long win in the GU. Well done, mate. British pound, Canadian dollar daily. So we've just recently had the BCR here. We've got the cash rich area retested. And we're ultimately looking for a daily breaker structure, aren't we? That's what we're really looking for here. It's quite a big deal, actually, where the pound CAD is right now. Yeah, it's quite a big deal. I mean, look at this area. That's essentially what we've got retested, isn't it? Yeah. So that's no small feat. I mean, the last time we were trading up here was in 2020. The month the coronavirus hit, March 2020. Beginning of lockdown. Right, so to be trading up here again, that's pretty good. That's pretty big. That's quite big news. So I think we'll certainly be looking at the previous daily high there for a point of interest, just as a reference point more than anything. Trading margin for this one suggests that this is the median of these two trading margins, right? Correct? Interestingly enough, right? Because we didn't actually know that ahead of time. So if this is considered the median, then we're looking at the breakout of the second half of the move. Second half of the move breaker structure is going to be there. And then we're ultimately looking for the breaker structure here, target profit, and naturally your stop loss, which is going to be about there. And that's a pretty good yield, 1 to 2.4 on that one, and that's not too bad at all. So, pound CAD, long. GA long. Euro Oz short, which is bounced straight away from the structural break, heading to the stop loss. Thank you very much, EA. Well, that is just on a hair's breadth, that one. Okay, yeah, we'll come back to these. Anyway, I don't want any more pound in the toolkit now, so we can move on from there. NZD against the CAD, no thank you. Simply because of exposure at the moment, ahead of the FOMC. NZD Swiss, certainly not. NZD JPY. I do want something New Zealand. as long as there's something to trade, of course. NZD USD. So Aussie dollar is not doing well at all. NZD USD having the price action pullback, but the New Zealand dollar certainly showing signs of strength and resilience here. We've got inflection, probably the bottom of that point right there. So don't be fooled by the chart. The chart is incredibly stretched out. So when we do this, it then becomes a lot more normal. So looking at the break close and the retest of this area, which is almost underway, then the trading margin is going to be... Yeah, I mean, that's looking pretty good, isn't it? You're certainly going to have some TRF in there, though, aren't you? That's not plain sailing, that one. We've had a 1, 2, 3, fake out, 4, fake out, 5. Actually, fake it. Well, that's news driven. Yeah, I'm not entirely happy with that trading margin. I've got to be fair. Not entirely impressed. So I think what I would do is actually just work with the most recent. So then the trade is going to look somewhat. Price action comes down, then comes back up. We'll be looking for a breaker structure basically at the base of this move, so about here. And really little trade idea, super small trade. We're going to be looking at the sort of target profit around there. Stop loss right up here. That's going to look like a 1 to 1.85. Something like that. That's what I'd be looking at for that NZD USD. We have to break into liquidity first, though. So the idea is to possibly get a retest of like this level, for example. So we come down, retest, break structure, onwards and upwards. So that could be quite nice. Right, USD CAD, no thank you. I don't really want to get involved with anything else dollar related now. Aussie dollar and NZD dollar, as it happens, trading off the commodity currencies versus the global reserve currency. A bit of a risky play, I suppose. Might be, but we'll go from there. Thinking about it as well, we've actually got... Yeah, this is going to be a little bit of a risk nightmare, to be honest. And I mean, things aren't ever really a nightmare with the way that we control risk in our strategy, but it does become a little bit convoluted. We've got we've got 3 Aussie primes, 2 or 1 Aussie secondary there, 2. My God, yeah, Aussie CAD, Aussie Yen, Aussie Dollar, Euro Oz, Pound Oz. We're buying the Aussie in these. We're selling the Aussie in that one. We're also buying the Aussie in this one. So we got 2 bullish and 3 bearish in the Australian dollar now. Yeah. Well, needs must. Let's push on. Right, let's have a look at these US markets. So yeah. Today, it's looking awful, isn't it? Yeah, it is looking rough. I'd say I think Scotty might be onto something here, team. I mean, it's going to be pretty... I would imagine it's going to be pretty dry this afternoon. I really do think so. I don't think we're going to see the big trading volumes that we want to. Simply because of what's coming out later. You know? Yeah, I mean, this is a difficult one, isn't it? Well, this NAS is at least. So what's the Dow Jones saying? Hmm. Well, yeah. This is not. This is. It's not inspiring confidence. It's not inspiring confidence. We've got the lows down here. That's one inflection point. You've got another inflection point up there. All right. So price action is currently trading right bang in the middle. So we've got one area here and another below. Ultimately, this is going to be forming our no man's land. This is where we don't really want to be getting stuck into anything. And then you're going to be looking for breaks of structure on either side of the market for the rally and the run. And that's how we're going to play it. Because the path of least resistance works out quite nicely here and here, right? It's this bit in the middle that's, sort of flip-floppy. So the NAS 100, I'm going to avoid it. So nothing on the NAS today. Not showing the NAS any love. It's all about the Dow today. I'd be looking for one trade above. Really, really simple process here today, guys. So looking for one trade above and one trade below. And that's honestly all I'd be looking at. Yeah, so you're looking at maybe 1 to 2s on both sides. Possibly. Trading on a 1 minute time frame, looking at the break structure, it doesn't make any difference. It really doesn't make any difference. So, yeah, you're looking at 1 to 2s on both sides of the market, and that's, this is heavily based on the fact we actually get some decent trading volume. I gotta be honest, actually, this isn't bad in here. This little on a 1 minute chart. Just depends, doesn't it? I think what I'm going to say about this, folks, is if you're still trading in the no man's land by the market open, and we're not on the verge of breaking free into one of our, larger trades here and here, then you do have the capacity to trade that margin. I don't think the no man's land is necessarily not trading worthy. The BOS for the short is going to be about there. The breaker structure for the long is arguably in here. Right? So there your two breaks of structure point. And you... Oh, whoops. Hang about. Yeah. And, ultimately, you look at it, take the trades right down to the low and right up to the high. So, capacity to trade inside here. You could potentially place pending orders in both of these. But you have to remember to clear down your charts prior to the FOMC. Now, I don't know if it was on anybody's mind to ask. I'll know if you're lying. But nobody's asked any questions about market exposure at the point of the FOMC this evening. So I would say this. We have a lot of exposure in the markets at the moment. As you can see, as you work your eyes down, we actually only carry 2 United States dollar assets. One being the NZD USD and one being the Aussie USD. Now, the Aussie USD at this rate is it's in trouble, isn't it? It's not looking good at all. The NZD USD has not even triggered yet. So, my thought process here for this evening's FOMC, which is going to be a big one, make no mistake, is I would probably be looking to remove anything with the euro. So, Euro Oz, for example. That looks like it's going to be a stop out anyway, to be honest. Which is fine. That's that. So, yeah, anything with that. And also the dollar instruments. Euro and dollar I would remove. I mean, at the end of the day, every currency is going to have a volatility strike because if the dollar dumps against the Australian dollar's value is going to rise against opposing currencies. So, it becomes a little bit of a rigmarole. But yeah, I would reduce your US dollar and your euro risk, and then just keep the others in check. If have a little bit of market common sense. If you're in profit, drag your stops up into profit, cover yourselves, protect your money. If you're not in profit and you're running a small loss, then just cut the damn thing. That's the way you do it. Just have a little bit of common sense about you. I tell you what, if you proceed with the thought process that we are here simply to protect our capital at all costs, then you'll be absolutely fine. How can you protect yourselves? Dragging stop losses up, bringing them into profit. If you don't have that option, consider getting out. If you're at break even on a trade, get out. If you've already incurred quite a loss on something, let's say Euro Oz, for example, is like trading here around the time of the FOMC, or by the time that you're not even watching the FOMC, by the time you leave your charts, then just let the damn thing run. About things like that. If the trade's almost there, you might as well just let it go. There's always the possibility that the FOMC is going to work in your favor, right? For the sake of 0.25%. I mean, we're not going to lose sleep over it, are we? We haven't over-risked, so that's the way to go about it. And that's that, guys. I think that's about it, really. I don't have anything else to say at this point in time. It's a shame about gold, but, it is what it is. But yeah, I think that's about it. So I guess I'll wrap things up there unless anyone else has any questions. And wish you guys the best of luck for this evening. Hope it goes well. If you are around, if you're not around, then don't sweat it. Have a lovely evening and good luck this afternoon. I'll see you tomorrow. Awesome. All right, nice one, guys. Okay, well, take care. Have a good one, and I'll see you then. Cheers, folks. Bye-bye.